please tell us something about yourself and your company, Equidam.
About me, I'm originally from Italy. I moved to the Netherlands about 10 years ago. Then I had a couple of years in Spain. And I've always liked programming and development. I started making little websites and games when I was 15. But then for many reasons, I went into finance and then started Equidam basically right out of my master. Equidam is an automated solution for the valuation of startup companies, meaning high growth potential, technology intensive ventures. And we've been doing this for more than 8 years now, and we're happy to do it.
That's great. So, what inspired you to start Equidam? Like, you studied finance and economics. So, was this product your brainchild?
Yeah. So yes, it was, in the sense that I always thought entrepreneurs they sort of underutilize finance because they come from all sorts of backgrounds, but obviously finance is only something that they learn generally on the job, right? And so they don't use it to its maximum extent. And so we really thought, okay, we can help at the beginning with knowledge. So we started with a blog, but then a lot of the questions were around what's the valuation of the company. They are talking to investors. They want to know if they're receiving a fair deal, and so the whole platform kind of came about. And we really, like, the main purpose is to help entrepreneurs use finance better.
So the methods of valuation approaches that you use cover more base than others from what we have seen. So did you have any first-hand experience or exposure in some investment deals where you came across such faulty valuations and you wanted to put out a product out there that did it with much more accuracy?
Yeah, so it's not like super about accuracy. It's more about like fairness now. So you're trying to find a deal price that is fair for the company and fair for the investor. And and these two parties become partners, and they try to make their joint basically efforts very large, right? And so yeah, I mean, we've seen everything, everything under the sun. We've seen deals that were very much not fair for investors because the founder didn't know, and the valuation was sky high, and and on the other hand, we saw valuations underplayed a lot by some investors, especially, like, it's a practice that is getting out, but at the beginning when sort of the internet was coming up and internet valuations were really high and people were used to valuations in other industries, then it always looked strange to have a very high valuation for a tech company. Right. Now I think people have understood that a little bit better, and then you have less of this type of problems. Yeah.
So you have extensive experience in this field. So what, according to you, are the key metrics that investors look for in startup valuation reports?
So there are two things, right? So valuation is composed of like potential of the company and risk of the opportunity. So in a valuation report, and generally, like, what we see a lot is people focus on the potential, and people focus on how huge the company is going to be, how big the market is, and things like that, and they focus very little on the risk. So I think actually a lot more focus on a valuation report, but also on the pitch deck, on the projections, should be put on showing why this opportunity has as little risk as possible. It still has like huge risks, right? But there are risks that nobody thinks about, like, for example, is the company real? Are the people there? Is can this be trusted? What's the stage of development? Is the company already shipping? Does the company already have customers, employees, costs, things like that? All these type of things, they lower the risk of the investment opportunity for the investor, and so they are super important to show in a valuation report, but also in any kind of conversation as well, everywhere. Yeah.
So Equidam has offices in Spain and Netherlands, and you're from Italy. So what is the Dutch connection?
Um, I came here for my master. So Rotterdam has one of the best finance masters in Europe, and so that's why I came here. And then we kind of started the company here. And then a couple of years ago, we wanted to expand basically our talent pool and like our basically ways to hire. And obviously Spain and Valencia were an awesome place for us to be. Now we have two offices, even though everybody's remote. But yeah, we keep the two offices as sort of hubs, and then people are just gonna gravitate, but they're gonna be wherever wherever the pandemic brings them.
So do you have talent from like all over the world or just Netherlands and Spain?
Now it's Europe, so it's Netherlands, Spain, and the UK, and we're looking for more people also in Europe, just because of a time zone thing. But likely we'll also look abroad, like outside Europe. Yeah.
So on the Equidam website, you've mentioned that you're serving around 90 countries. So in the future, are we expecting that this list is going to expand, or do you have any particular focus markets?
Yeah, so the we try to cover, like, valuation is a bit more general than accounting, so it's a little bit easier compared to an accounting software for us to cover a lot of countries. For now, yeah, we covered the 90 major ones, let's say, where startups more or less historically have been, right? But now you're seeing like a lot of countries, like, getting into the trend. Everybody, like, starting internet companies, is starting startups. So we're definitely gonna expand. We're seeing more and more interest from Africa, that for us is not covered enough, for sure. And Asia as well. Like we're growing very well in Southeast Asia, and yeah, so definitely we're going to add countries. We don't have a particular focus market, in the sense that I think we're still really like skimming the surface of the need, and we have such a low penetration that we're still able to basically distribute our marketing activities across the globe. I think when we need to get a bit more specific, then yeah, we're gonna have to choose and target a bit more. Yeah.
So I was curious about how Equidam helps the really early stage startups where forecasts are uncertain.
That's a good question. So, um, well, we have 5 methods, and 2 of them are completely independent of forecasts. So, when the company is super early, the valuation itself is only an outcome of forecasts for a minimum part, because exactly of all that uncertainty. But for the major part, is actually dependent on how do they stack up against other teams, like in the same stage, other, like, how many milestones did they get so far, again, how much has the business been de-risked so far, and that's a bigger predictor of the valuation compared to the forecast. We still use forecasts because we believe it's an important thing for founders, even at the earliest stages, to kind of plan out where they want to be, like what's their ambition in terms of numbers, and also try to get a glimpse whether the business is going to be sustainable in terms of margins or not. But of course, we know that at the early stage, yeah, forecasts are very uncertain, to say the least. So, but yeah, that's how we do it. But we still think it's a super beneficial exercise for at any stage of a startup. Yeah.
Can you tell us in brief about the 5 valuation methods that you just mentioned?
Yeah. So we basically took like all the research that there is around startup valuation, and we selected like the methods that we think are the most applicable, and we tested them in the market now for 8 years. So the of the 5 methods, 2 of them are these qualitative methods. So they take into account the strength of the team, again, the risk, the market risk, the when was the company founded, how, like, for how long has it been surviving. So try to estimate all those risks and compare the company with other companies on these things. So now we valued more than 130,000 startups around the world, and so we know pretty well what's an average, what an average company is going to answer, and so we know if this company is better, like further along the milestones compared to another one. So the third method is called the venture capital method, and it's just a very quick valuation exercise, generally done by venture capitalists, or used as an estimation kind of way by venture capitalists. And we brought that into the software because basically it gives the perspective of the required return of an investor. So we're trying to add as many perspectives and points of view to calculate the valuation of the startup as possible. And the last two methods are discounted cash flows. So they are generally the gold standard of valuation. They are used for the valuation of anything, and they take the point of view of an investment. So they compare that investment in that specific startup with all the other investments in order to find out the price. And that's it. And then basically the final valuation is a weighted average of these methods. And as we were saying before, the more uncertain the projections are, the more weight we put on the methods that don't depend on the projections. Yeah.
Equidam has been running for 8 years. So what has the feedback from your users been like?
The feedback is very good. I think otherwise we would have stopped. But the feedback is good. Like, a lot of people don't have the knowledge or the confidence in these things to actually do it on their own. And so that's really the main point for them when they use us. They're kind of guided through the process. They learn about what drives their valuation, what makes their valuation what it is. Because for a lot of founders, especially in tech, valuation always feels ephemeral, no? Like there's no product, there's no assets, there's no building that you can sell, right? And so they don't know, right, that they should see the company as an investment opportunity for somebody else, and that's where the value resides. And so by basically going through the questions that we ask, seeing how the valuation changes according to what they answer, they really get a better perspective on what drives their valuation. They can negotiate it better. And the other nice benefit that we have is that, being an automated platform, if you have your financials ready, it takes about half an hour to go through the whole process, right? And so there are situations in which you need to have a valuation by tomorrow, because, again, founders are busy, and they always get to, the last thing that they get to is their numbers and their fundraising and stuff. And so in an array of cases, when you need to have a valuation by tomorrow, an advisor or a consultant is not going to be able to do it. Or you're going to have to contact 50 of them, so you don't have the time as well to contact 50 of them. So in that case, that was also very good feedback that, we can do it in like half an hour, or like the platform does it in half an hour. Yeah.
So you also have a research center. So can you tell us about the Equidam Research Center?
So as you can imagine, as a byproduct of our activities, we collect a lot of data about the companies that we value. We, of course, we don't share the data at all. We don't use the data unless it's anonymized and aggregated for research, right? So the Equidam Research Center stems out of that, and it's a group of professors and PhD students that basically is working with our data, again, anonymized and averaged and stuff, to basically discover new things about what makes a startup environment successful, what makes a startup successful, fundraising, different types of correlations with the different drivers of the business. And it's been quite interesting so far to see that, and we're happy to support that type of research. Yeah.
So do you have any plans to provide this data to the public, maybe on a subscription basis?
Well, the bulk of what we do is actually just share it for free on our blog. So really like provide, research back into the world. As a product, for now, it's on the horizon, but it's gonna be further along. Yeah.
So, what's in the pipeline for Equidam, if you're willing to share that is?
I mean, like, yeah, the main plan for us now is really to try to expand the use cases that we have. So obviously now we are getting more and more in a leadership position on the fundraising valuation side, especially seed and Series A. So early stage, but there are an array of use cases for valuation that at the moment we are not covering, and we hope to be covering in the future. So we're working really hard on that, and yeah, hopefully you'll hear more about that soon.
Also, do the startups who are looking for exits also approach Equidam?
Yeah, so the exit is so obviously, like, our automated solution is very cost effective. So the smaller the stakes involved, right, the more convenient it is to use a cost effective solution. So an exit is generally maybe a bigger stakes are involved, but for small exits, yeah. So I think about maybe 10% of the valuations that we do are for exits. Yeah, and yeah, like it's exactly the same calculation, right? So aside from the amount of money that is being raised, because there's no amount of money being raised, but yeah, we've done a lot of exits, yeah. Valuations.
Yeah, and being an entrepreneur is a difficult process in itself, and the fact that you guys are guiding them and rooting for their success is really commendable.
Thank you. Yeah, like I mean, it's fun. It's a difficult process if you are from, like, if you don't know anything about it. But like, yeah, in the end, it's just a calculation, and we really, brought all the data available online to do that calculation easily, and then, there's no magic behind. And the main thing really for us is try to provide transparency to both parties, right, of the deal, and for them to agree, right, to not just leave the room because of expectations, because one is expecting 10 million, one is expecting 1 million, and they just leave the room, right, instead of like trying to confront their assumptions and close the deal. So that's really what we are about, and what our valuation report, the ultimate goal of our valuation report. Yeah,
That's great. Thank you, Daniel. Thank you so much for taking out time for this interview.
no problem. Thank you for having me, and yeah, keep up the nice work.